Let's talk about the BRCGS terms, traceability, when that becomes a vertical audit, and where does mass balance fit into all of this? All right, so in the BRC standards, traceability is one of the fundamental requirements, of course. Now, when we talk about a core traceability test, that is the very simple being able to trace from a finished product all the way backwards to the raw materials and packaging that were used to create that finished product. And when we talk about a forwards traceability test, it's been able to do it the other way around, where you can pick a raw material or an individual packaging item and say, I received a certain quantity for a certain batch or lot number on a particular date, and you can show exactly where all of that was used or where it's gone or which of it is still sitting in the warehouse. You've got full traceability forwards that way. Now, that core traceability test backwards and forwards needs to be done within 4 hours, and that applies to when your auditor asks you to do a traceability test during the audit. It also applies to your annual traceability test that you need to do at some point in a 12-month period. Now, it becomes more than a traceability test when your auditor wants to see supporting documentation. For example, you'll say to them, we received this particular lot of raw material on a particular date, and they'll say to you, could I please see how you approved that supplier? And supplier approval is, of course, a prerequisite program. It's a supporting process, and it's a vertical supporting process, supporting that core traceability that you do within the 4 hours. So that additional information turns it into what we call a vertical audit. All right, you can get more time to do that. In addition to your 4 hours, you can get more time. So that's the vertical audit. Now, part of it, as I've described, is showing that you know exactly where everything has gone. And so that's where mass balance comes in, where your auditor might say to you, I want to pick this particular ingredient or this particular packaging material. Could you please do a mass balance exercise on that? In theory, you need to be able to do mass balance on every raw material or every primary packaging item. Now, that is showing a particular batch received on a particular date. You know the exact quantity, you know where it's been used, which finished batches it's gone into, you know how much was wasted and thrown away, you know how much might still be sitting in the warehouse. That's balancing, isn't it? What came in, what was wasted, what went out. Yeah, that's your mass balance. Now, auditors typically pick a product with a claim on it. So, mass balances can get complicated. You can gain weight in a process that can absorb water, for example, like dry beans. You can lose weight on something like coffee roasting, for example, where the water comes off through the roasting process. But it can also be that you've got a very sticky product like peanut butter or something like that, where there might be, some losses, some unknowns, where you've calculated to the best of your ability, but it's not the most accurate process. Fine. Your auditor accepts that, where there's logic, where it makes sense, that you might have a margin of error on a very difficult process, and that's not a problem. But as I say, the auditor will typically pick a product with a claim. Now, if you've got a claim, if you're making a claim, they're going to say you need to be able to demonstrate that claim. And if you've got a high level of uncertainty on your mass balance, that's where we worry about fraud. And obviously, you want to be able to defend your business and show how fraud didn't happen. If I stick with that sticky example of peanut butter, if you're making organic peanut butter with the claim and conventional peanut butter, and you've got a high level, a higher than acceptable level of unknown error, this is where the auditor will focus their attentions, and that's what we don't want to see. So take care that you can always justify the claims that you are making, that you can do a mass balance, that you can account for any levels of error in that mass balance. All right. And that's, of course, why the auditor picks the products with the claim wherever possible. Or they might pick a particularly complex process as well, because that's a true and thorough test of your systems and all your records. All right, so those are the 3 terms. I hope that clears things up for you. If you want any further clarification, get in touch. You can attend one of our courses. We offer consultancy, and we'd be happy to help you. Thank you. Take care.